Hey traders, BA back here with another really short video on one of my intraday trading models. This is the intraday trading model that I've kind of put together for trading options on stocks and futures markets. So it's going to be really short. I'm not going to delve into a lot of details, but just to give you a glimpse of my thought process. Just to continue on what I wrote a couple of weeks ago in one of our weekly newsletters. So in addition to showing you a glimpse of the intraday trading model, I also want to show you a neat little function in Thinkorswim that I been using for a long time, but have recently incorporated into the daily trading model as well, so our intraday trading model. So anyway, let's get started. So what you see in front of you right here is a screen for one symbol. It has on the far right is my higher time frame that's kind of fuzzy when I'm looking at things. I'll explain a little bit more what its purpose is, but right now it's a 30-minute time frame. These two charts are all 3-minute time frames for intraday trading. The chart in the middle is what I'm going to show you how to do if you've never done this before, but it's to plot the option prices of the I use the at the money call. So it's a 3-minute interval of the actual option prices. You can see those on the side here. And this chart on the far left is really the primary chart I'm looking at, and that's the 3-minute time frame chart for. So you'll notice first takeaway I want you to look at is the multi-time frame difference. So I'm using a 3-minute for my trading chart and a 30-minute for my higher time frame. So the higher time frame again is fuzzy. I'm just looking at this for key things. Are we in an uptrend? Am I at an inflection point? The ratio of trading chart to higher time frame should be at least 5 times higher. So I could really, on a 3-minute chart, I could go down and put this over here to a 15-minute if I wanted to, but no more than 10 times what your trading chart is. So I prefer the 30-minute or the 10x factor over my trading time frame intraday. It allows for a lot more trades in a defined trend. That's all I'm looking for. I'm looking to execute, like in this bullish trend up right here, this new trend. I'm looking to execute as many long trades intraday that I can possibly hit. Now this trading methodology here does not allow me to hold trades overnight, so I'm only looking for 1, maybe 2 high probability trades in a day per symbol that I'm watching. So anyway, that's an explanation of the charts and the time frame. Now on the right here, what I have going on this hourly time frame is a trend model. It colors the it paints the bars. It's green in an uptrend and it's red in a downtrend. I also have some automatic trend lines plotted just to put a little more context around the market. Again, this is all fuzzy for me. You'll also notice a couple of bubbles here. It says reversal and reversal. So when it plots a reversal for me, it tells me that the trend is high probability that it's going to change trends early on. And it puts a line up here that if it fakes you out and gets back above it, it was wrong. So you can trade, make a bet in this with this little indicator here as early as you want to, with a pretty tight stop on in case you're wrong. So but here it nails it. It tells you to go short somewhere on this bar and goes all the way down into that support level. It doesn't tell you to go long again until this bar right here, and then goes back up again. So but again, green is bullish, red is bearish, and then I've got the reversal indicator plotted on here just to kind of help me take a little more out of that trend if I can. I've got a momentum indicator here that really just confirms the trend, but it provides another very important factor. These two here kind of paint a picture for me. Those are my top and bottom pickers. So anytime this bottom indicator is in the red, we are susceptible for a market high. Not that it can't continue to go higher, but I start looking for it to break down. And then once this one hits the double bands, this one is in the red, and we get a move down, we can start making higher probability bets that we're going to get some down move. And you can see it happens there. So these two are kind of top bottom pickers for me. Once this gets into green on the higher time frame, it is definitely, we are susceptible for an up move. Okay, so that's kind of the hourly time frame. Over here is I'm going to walk you through how to actually plot the at the money calls if you don't know how to do that. So first of all, we're going to pull it up. I'm going to show you. Let's plot another symbol up here first. Let's go with SPY. Alright, you'll notice my other charts are linked together. This one has a different color. There's a reason for that. Alright, so now we got a 3-minute chart of the SPY, 30-minute chart of the SPY. Let's go ahead and go to our trade tab. We have SPY in the window because it's hooked to our symbol link. Now what I like to do on these is stay 1 to 2 days out. So we're going to go, I'm just going to plot this 3 July expiration. In the intraday model, you're not holding options overnight. This is only good for all of the stocks that have weekly options on them, because I only want to stay 2 to 3 days out at any one point in time. No more than 3 days out on an option trade if I can't help it. So because I'm not holding them overnight, I'm taking a day trade and that's it. And honestly, it's like trading penny stocks whenever you're trading options with 1 to 3 days out. So we'll take this 3 days to expiration option chain for the SPY. Call side, we're going to go in here in the bid, just right click on it, and let's go over here first. Let's go to the ask column. We're going to plot that the ask column, and we're going to, once we get the window, go all the way to the bottom and then send it to that orange chart symbol link that I had in the middle. So what that's going to do, it's going to plot that at the money option. It will once I get to the right chart. Okay, so there we go. Alright, so this is the at the money option for the SPY. Alright, this is a theoretical option pricing, so we just want to get rid of that. That has no bearing on what we're looking at here. Now what I've done here is on style, I have changed from you have most of the charts we trade have either candle or candle trend type of thing. So that's what candle bars look like on an option chain. I want to smooth it out a little bit more, so I use what's called a Heikin-Ashi or Heikin-Ashi. See, it just fills in things and it gives you a better picture. Now, don't use Heikin-Ashi bars until you Google them and discover how they're plotted. Okay, they're a trend indicator in and to themselves, but they're kind of tricky. This just gives me a picture of what the at the money trend looks like at the money calls. So I don't plot these on my normal bar charts because of the nuances in Heikin-Ashi, but for this, it looks good. Now, one thing's important on these two charts for me is I don't really want to look up close like that. I want a compression to where I can actually see a little bit of trend in the price activity. I want to see key points, and I want to see it how it's progressing. So that's really important to me. All right, so Heikin Ashi, this is the another trend indicator I have on here. These are I'm going to stomp my foot. I have for a lot of times on intraday trading. The two most important lines I have are the VWAP lines. This orange colored is a daily VWAP. This is a weekly VWAP. So I'm going to right click on the daily just to show you what that looks like. I just have that indicator set for day, the time frame for day. On the upper and lower band, I have this show plot deselected. I don't want to see those. That has no bearing on my trading whatsoever. So that's how I set that up. And on the weekly, the only difference is the time frame is set to a weekly instead of daily. I'm going to show you the importance of those here very, very quickly. All right, so this is the momentum indicator. You can see here in the green, possible rally, we get a move up. In the red, we get a breakdown, gets below the VWAP, comes down, then we started an ascending move back up again. So VWAPs are very important. You're going to see that. I have this plotted right here. This is a top and bottom picking tool that I had built for me. It shows up, it just confirms some of the action over on this chart here. So anyway, that's number one, how to plot the option pricing, and I use that just to confirm the pricing action. And you're going to see when I pull up a couple of charts here that why the VWAP is so important to me. All right, now let's get over to the actual trading chart, which is my 3-minute time frame, and you'll see I've got a trend indicator here, the daily VWAP there. Everything I use is same color on the charts. This is just the moving average that we introduced over here. That's the trend model. So price is above it, it's green. When it's below it, it's red. It's really a pretty smooth trend indicator. All right, momentum indicator here. Red zone, potential pullback or sell-off. Green zone, potential buy zone. And then this is my top bottom picking tool right here. You can see forewarns you of potential down move, gets you ready for a potential up move. All right, so it's a quick explanation of some of the things. What's important is that I have a trend model. I have top and bottom picking model that alerts me, and I have key support resistance. The key support resistance is the VWAPs. I like support resistance levels. I'll use static levels, which are these hard and fast lines, trend lines. Those are important, but by far intraday the most important thing is the adaptive nature of the VWAPs. The VWAPs are nothing more than a volume weighted average price of the trades taking place over the course of that day, course of that week. And you're going to see it is very, very accurate at inflection points where you can take trades. All right, so for example, S&P, it's meandering about the VWAP right here. We get down this trend indicator, it battles here, it finally takes it, it gets above. Now, I would probably wait right here to take a trade until it came back down and challenged the VWAP. So we get the challenge here, it holds it, you got an entry anywhere above that VWAP where the trend indicator. I'm just looking for, we're in green over here on the 30-minute. I'm looking for a good place to take a trade when the market turns green again. And honestly, I would have probably taken the trade right back in here at those where it bounced off the VWAP. We were still green, and that was good. We go red to green, you can take another trade there. I'm just looking for trades. So you can see this is how the trade materialized. Goes up, get a nice trade. What does that look like on the on the at-the-money calls? Well, we get a break above the trend indicator. It kind of stalls around this moving, the VWAP right there. That's crucial because until it clears both of these sets of VWAPs for the volume and for the option and the price, you're probably going to have some congestion, which is what happens. It's not until this thing clears both of those where you could really take both trades in gusto, add more. I mean, look, it breaks out right there. It goes from red to green again. That's when it breaks out clearly above those VWAPs, and then it's just Katie bar the door. That trade right there, let's say you would have botched it up and gotten in at 58 cents. Well, at the end of the day, this trade is worth, it goes up to a high of, we'll call it 89 cents. Okay, that's about a 60% move on your trade that day. You don't have to hold it that long. You can come out at 15 to 20%. So it, you can take a trade here and right in here you've got your profit. 10-15% for the day. So again, all I'm looking for, if I'm green over here, I'm really looking for to go from green to challenge the VWAP, bounce off of it. If we get some red in there and we go green, that's perfect. Here we're red, we go to green, you take those trades. All right. One more example, and that's all we're going to spend on this right here. So let's pull up, let's look at maybe Tesla. Haven't looked at that one this weekend yet. All right, so you notice that nothing's changed here. We got to go back and plot that. So let's go back to our trade tab. We've got Tesla showing. Tesla is, by the time I trade this, we've got no more than 4 days left. So that kind of fits that model right there, somewhere at the max of 3. So that's the option chain we want to choose. We want to send this to orange. Go back and go back to our charts. All right, we want to get rid of that. It doesn't have any bearing. Remove it. Yes. All right, so this is why I like plotting the VWAPs on both of these. Let's just walk through the trade. Tesla is in an uptrend. It's all green through here, okay? So you're really looking for green trades. Look at the price right here where Tesla is, it gets above that. You could easily take a trade above this daily VWAP right here if you wanted to. We have several things I'm looking at in here. Look at this green to red. It's above the VWAP. I love these kinds of trades where we're above the VWAP, we get a little red, then it pops back green again. Okay? Perfect place to put a trade on right there. What does that look like here? It confirms it with this upshoot on the trend model, but you're not really sure until the option clears that VWAP there. It clears it with gusto and just keeps going up. Okay? So what does that look like? You've got, let's say you get in for, you're right around $3 an option there. Well, you've got to move up to $3.30 and some change. So it's a 10% move right there in a very, very short period of time. We'll call it, 6 to 8 minutes. So very nice move. Notice how the Heikin-Ashi candles turn. They move back down to the VWAP. It battles there. It stops right here. I get a low indicator right here, potential bottom, and then a green candle back up. Again, another move back up. Heikin-Ashi turns red. It goes back down to this VWAP. Back up again. We get red to green right there. We're just going from red to green, taking trades. You only need one of those, guys. That's it. You can sit here and trade it all day long if you wanted to, but you only need one of those. Let's look at this last move. Everything is confirmed. Here's the weekly. Everything's above the weekly. Every move above the VWAP on the daily is a bullish buy. Okay, you gotta get accustomed to doing that. So, so here, this last trade would go up on Tesla as well. Everything confirms it going into the close. So, hey, just wanted to kind of summarize a couple of things here before we end it. So, number one, VWAPs are very important. That's an adaptive support resistance line intraday that I use to run trades on. Your trend indicator, whatever you like, there's no secret, no special ones. It's just whatever you like. I like color-coded trend indicators because I can, at a glance, see my fuzzy long-term chart. It's green. Okay, momentum, nothing going on down here. It's just green uptrend. Take buys. This is in focus. This confirms, gives you another dimension into your trading model. That's all this is. Both of these I'm looking at. I'm really focused on this one. All right, and just kind of shows you the interaction, how I use a trend model with a top-bottom picker, and just some of the ways I queue trades up. So that's it for this session. Hope that helps in your development of trading methods that you use. You see, it's very simple, nothing elaborate. I didn't really go over the reversals on this. It's a secondary consideration. I don't really look at that on this model here. I just have it plotted, but I do look at it on this time frame. You can see here where it told you to get in, and that trend was really close to the bottom, and it gave you nothing but from 229 so far up to 245, a really big trend to trade green in. Okay, so that's it for this session. Again, hope it helps, and this is B8 signing off.